morning. Welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Post-crash Tuesday as we get the day underway. Markets looking to open slightly higher this morning after a fairly steep slide yesterday. At yesterday's lows, markets were down 5% from peak to trough yesterday. So there's that 5% correction that we've been talking about over the last several weeks finally occurred. This very slow grind down, though, in the markets has worked off a lot of that overbought condition. We're back into very oversold conditions right now, really kind of setting the markets up here for a bit of a bounce. Now, media headlines say right now this is the worst crash since May. We've got to go all the way back to May over here, and we did see a similar decline here back in May. The difference was in May, we didn't actually break the 50-day moving average. Volume did pick up here accordingly. So again, there is some similarities. We had a huge spike in selling volume yesterday as people were really selling to get out of the markets. The markets did break and violate that 50-day moving average. Now, at the end of the day, we did get some buying coming back. We reversed about half the losses from the morning. So again, that showed some bulls out there actually trying to buy the dip. The question now, though, is really twofold. One, is there going to be follow through? And two, what happened the last time that we had this type of a sell-off during the day? First, let's talk about the last time that we had a similar type of sell-off in the market. For that, we have to go all the way back here to March, where we actually did wind up breaking the 50-day moving average, had buying coming in at the end of the day, recovered about half the losses, very similar to what we saw yesterday. The next day, the market rallied sharply and got above the 50-day moving average and continued the trend back to new highs. Now, this is what a lot of kind of the bulls are expecting at this point, just a continuation of that trend. Maybe that's the case. That's the one thing we'll be looking for here. Importantly, the markets have to get above the 50-day moving average either today or tomorrow. Otherwise, there's a bigger risk approaching for the markets. One of the big challenges for the markets over the next few days is going to be the issue of the Federal Reserve talking about whether or not they're going to taper, the Evergrande situation, slowing economic growth, and corporate profit warnings, all those beginning to kind of weigh on investors' attitude. More importantly, liquidity flows globally are beginning to slow as well. That's what's putting some pressure on the markets here. Now, as I said, there's two risks here, really two pathways. One, if we can repeat the pathway from March, that would entail a rally over the next 2 days above the 50-day moving average that would then set the markets up for a rally to new highs and then potentially probably another one of these kind of sideways trading periods through the end of the year. The other potential probability is a rally to the 50-day moving average on fairly weak volume, which is kind of what we expect to happen here. A failure at the 50-day moving average potentially leads to a test of that 200-day moving average. Now, that would give you a 10% correction from peak to trough. That would also reverse a tremendous amount of the overbought condition this year and set markets back to more normal situations going into 2022. Again, a 10% correction in any given year, completely normal, but is it going to happen now? A lot of that will have to do with the Fed, what happens in China, and of course, corporate profits. We'll be watching all of that for you right here on 3 Minutes of Markets and Money. Keep a watch. Get by the website today. Technically Speaking has all the rules to trade both potential outcomes here, what to do with your money and how to manage risk. Technically Speaking on the website right now, realinvestmentadvice.com.